Hello and welcome back to day 3 of FinTech Festival India's digital mega event, everybody. Our next masterclass on payments is brought to you by CFTE, the Center for Finance, Technology and Entrepreneurship, a global educational platform providing finance professionals with the knowledge in FinTech to thrive in the world of digital finance. CFTE trains tens of thousands of professionals from leading financial institutions and teach companies on important trends like artificial intelligence, open banking, or digital payments. You might have heard of some of their courses, such as FinTech course of Hong Kong University or artificial intelligence in finance with Key and Polytechnic. More than 200 experts from the best banks, insurance, FinTech startups, investors, and regulators help CFTE design these programs, which are relevant to working professionals in what they call for the industry, by the industry. With us today is Mr. Ritesh Jain. Ritesh is the co-founder of Infinite, who are extremely driven to humanize the credit and credit card experience. He's also the former COO of HSBC and advisor to MIT, Harvard, as well as some of the leading incubators and accelerators in the world. Over the next 40 minutes, Ritesh will take us through how payments is the fastest growing sector of finance and how now widened to include digital payments, QR codes, cryptocurrencies, and CBDC. We will also get the opportunity to hear the views of senior leaders in the industry and understand why payments is the Trojan horse of finance. And now, without any further ado, I would like to invite Mr. Ritesh to take on the virtual stage.
My name is Ritesh Jain, and I'm a co-founder at Infinite, humanizing credit and credit card experience in the UK and European market. And I'm a former COO Digital at HSBC and a member of G20 Global Program for Financial Inclusion. I'm an advisor to MIT, Harvard, and few incubators and accelerators as well. And here we are going to talk about payments, the underdog of finance. So in this short course, we have segregated that into the 4 parts: understanding the payments, the hot topic, reason behind the growth, and the various payment methods. So I'm pretty sure when we talk about the payments and understanding the payments, you all know what payment means in general terms. As you and I as a customer, we use payments throughout the day and throughout our life. And we use that from morning coffee to the nightcap. It's very interesting that we still talk about payments quite regularly. Why? What has changed in the payments? It's all about the way we interact with the platform, services, systems, and our customer behavior, our own behavior. Yes, it has changed significantly. Think about yourself going to a shop 5 years back and making a small change. You were looking for a small change in your pocket to make a payment. But today, you just pull out your card, swipe the card, or probably you'll just wave your phone and your small payment is done. And that's what the difference in last 5 years. So yes, we talk quite a lot about payments, but yes, it is growing rapidly. And that's what one of the main reasons we talk about payments. Anything and everything in the financial sector evolves and revolves around payment. And that is the value of payment. You buy anything, you shop, you eat, you travel, you do anything. You interact with the payment system in one way or another. Yes, as I said, everything evolves and revolves around payments. You shop anything, you eat, you travel, you buy stocks or insurance or mortgage. Anything and everything, you interact with the payment systems. And that's why it is quite critical. And we are calling it as an underdog. The reason is because that is still lacking. What happened over the period of time in the financial services in the system, in the variety of interfaces, we have been quite focused around putting a digital lipstick, around digitizing channels. But the payment platform and services are still lagging innovation. Yes, there's quite a lot of innovation happening, but still not to the mark. Payments are everywhere. You look into any news, any media, LinkedIn news, anywhere. You talk about the payment platform, payment services, FinTechs, and the innovation in the banking and the platform. And that's not limited just to traditional payments. Now we are seeing quite a lot of news around the cryptos, the digital assets, the digital currencies. So what's really happening? Why there's so much buzz now than ever before? Because it is a requirement of the time. The payment infrastructure need to evolve, because that's the requirement of the businesses, and that's the customer requirement as well, because our behavior have changed. We are expecting a frictionless customer experience. We are expecting on-tap services. But still, there's quite a lot happening in the payment landscape, and we'll talk about that. Payments, the hot topic. Yes, it is. Look into what happened over the period of time. The barter system we have come from 9000 BC, and then move on to the precious metals, coins and paper money, and the paper money in the European market from 1600. Then we have seen the advent of credit and debit cards. I was just speaking to one of my colleagues in the Nordics market, and he very well remember utilizing the debit card at the first time. And we have seen the advent of e-commerce, which has definitely transformed the payments landscape as well. And forget about all that. The biggest transformation that we have seen from last decade, it's about the contactless and the evolution of fintechs. And the type of payments and the payment method have changed with the introduction of the digital assets like Bitcoin in 2009, and the e-wallets, and the RTP, and the request for payments, and the EIPP, and the EBPP, and it's never ending. So it is growing at a rapid pace. We have come from the barter system to the RTP today. And the real-time payments, like UK has got the real-time payments, European market, or the Fed now, which is coming up in US in 2023. There's a huge transformation in the real-time payments landscape as well. And it's not stopping anywhere. But when we talk about the payments and the underdog, yes, that is one of the main reasons we call payments as an underdog. The cross-border payments have been neglected for too long. In a yearly basis, around 130 million transacted across the globe, and most of the payment transactions are related to cross-border payments. Is still our cross-border payment infrastructure not up to the mark? Yes, we can argue about SWIFT, GPI, and we can argue about the various payment infrastructure which are evolving. But we still say they are evolving. Yes, there's a lot of transformation. Today, if you have to make a payment, you're not relying on to your bank to provide you the FX rate. And you're not just relying on the bank, because there are umpteen partners out there who are providing you the competitive services. And that's what the difference that we have seen in the cross-border payment, whether it's retail or B2B. In the cross-border payment, another transformation that we are seeing as of today, it's more around the utilization of the blockchain platforms as well. And that's it has got a great potential. And I'm sure we are going to see that transformation sooner rather than later. But let's look into what is really happening into the cross-border payment and what are the challenges. The infrastructure is the major hurdle in the transformation. We need an infrastructure that integrates both with regional and global payment methods, because the requirements of a customer, whether it's a B2C or B2B, are both. So you have to cater to both the customers in a more efficient way. It's all about the various payment methods, because obviously as a as a merchant or as a service provider, you do not want to interact with the multiple platforms and the services. You're looking for the consolidation. And basically, with that consolidation, what you're really looking at, the language in which the platform can speak to each other. And I'm sure you must have heard about ISO 20022. Yes, that is what going to make a difference as well. Because then the platforms and services and the systems are going to speak into the similar languages. And that is going to lead an efficient transactions. And it will reduce the number of failed transactions in the overall payment structure. Now, when we talk about the data management, it's one of the most critical part into the cross-border payment. The reason is when you are managing the various payment methods, you do not want to interact with the various platform services and the data. And that's where the data management plays a significant role in the cross-border transactions or the overall payment infrastructure. At the same time, transparency and the trust. Once you lose a customer, you're not going to get them back. So you got to be a bit more transparent and trustworthy. And these are the fundamentals for a better infrastructure for payments. And that's where the cross-border payment infrastructure is moving towards. And what we have seen in the payment landscape specifically, there's a huge technology evolution. We have come from the monolithic platform to the modern platform, which is like infrastructure as a code. It is in part and parcel. If we say all the platforms have adopted the cloud technologies, that is not true. But we are looking into the future where we would be looking at the container as a service or even payments as a service. So if you're a service provider or if you're a financial institution or a bank, you don't need to build services. You can just get the payment as a service from the various service providers. And that's a major value stream. So the whole payment landscape is going through transformation. And we have already seen that through the numbers. The evolution of the financial institutions, if I'll take you back in 2010 versus 2020. So here's the companies which were the top 10 in 2010 with their market cap, and look into the right side, which is 2020. So 10 years back, the top 10 financial institutions were dominated by US and the Chinese banks. Today, 5 of the 10 institutions are platform-based. Look into Visa, look into Mastercard, PayPal, Tencent. And this is not ending. So there's a clear transformation. Now the only way forward is to become a platform-based economy. And what fintechs have done over the period of time, they looked into the problem, understood the problem pretty well, and they solved the problem for both sides of the customer. Whether you consider a payments platform or open banking platform. So the fintechs are making a huge difference into the payments landscape. Whether you consider that from the ranking perspective or the market capitalization, all these companies, top 10 fintech companies, are based on payments. Stripe, Square, Coinbase, Grab, and all of them, they are evolving and revolving around payments. And they are making it life easier for the businesses to grow and evolve. If you would like to make your customer to accept or make payments, you can directly take that as a service from any one of them and you get going. You don't have to worry about it. There are multiple value streams in the payments. So generally when we make a payment, you swipe a card at a machine, there's a lot goes behind the scenes. There are multiple value streams and the multiple players. I'm not just talking about the issuers and the acquirers. Yes, there are gateways and the processors and variety of others. And I'm sure I've got a lot more courses in which I can talk to you in detail about it. Here, when we talk about the payments, specifically today, there's one thing which we hear quite a lot. It's about the digital asset and the advent of the digital asset from 2009, and that is a Bitcoin. Yes, we have seen a significant movement in Bitcoin from early days until today, which is hovering around $64,000 per Bitcoin. Yes, it's a significantly volatile as well. The price movements are volatile, but it's all due to the regulatory and the compliances as well. The lack of regulatory and compliances today making this market to go a bit volatile. Yes, we are looking at the regulation and compliances in the digital assets environment as well. I'm sure you can argue about, but SEC is going ahead with the ETF for the Bitcoin. Yes, that is happening. And I'm sure that will have a positive impact on the digital assets in the near term. So again, it's a very interesting part, which I really want to talk about. When we talk about payments, generally people consider payments as card transactions, as the retail or the B2B transactions. Let me give you a view on the city, and that's a Citibank. Citibank has got a business unit called Treasury and Trade Solutions. It's very well known as a Citi TTS. TTS forms 30% of the city's business in terms of the global revenue. And that takes away 22% of city's global profits. So you would imagine a bank, a global bank, their 22% revenue just comes from the Treasury and Trade Solution business. And that just evolves and revolves around payments. And that is not even your core banking. On the other hand, when we talk about the card networks, likes of Visa, likes of Mastercard, or the other payment card companies or the card networks, general assumption is these card networks, their major revenue comes from the transaction. But let me clarify, only 1/3 of their revenue is from the card transactions. As I said earlier, there are multiple value streams in payment. And what card networks and the other payment businesses have realized that the market is disrupting. So they've already started focusing on the multiple value streams. And so an interesting fact, the best data is held by the payment companies. So when we look into the payments and banks, the card networks, and I'm sure you heard quite a lot about the CBDCs. What does that really mean? Central bank digital currency, because here at one hand we talk about the Bitcoin and the multiple other digital currencies which are available in the market. So why central bank is after the digital currency? The reason is because central bank is focused around we hear quite a lot about the central banks and their digital currencies. Central bank is focused on issuing the digital currency over the period of time. There are many initiatives which are going on at the moment globally. One of such project is focused around the cross-border payments. That's called Project Denver, where quite a few central banks came together and they're working on a platform infrastructure for cross-border payments. But like the central bank is basically managing the money. Now there are two parts. They issue the bank notes, which is the cash, which is in rotation in the B2C landscape, as well as they look after the digital currency as well, or the e-money in terms of the deposits, which is into B2B environment. And the CBDC is a union of both. Now, there's a big question about the central bank digital currency, that what will be the future of banks after the central bank digital currency? Whether an individual will have direct relationship with the central bank in the money management, or whether it will be distributed through the bank. And that itself is a very interesting topic. And I've got that covered in one of my course, and I'll talk you through that. So why central banks are involved with the digital currency? Central banks are focused on the digital currencies for multiple reasons. They would like to build a payment landscape, a very robust infrastructure. They want to avoid the risk of a private payments and the private money creation, which is in flow as of today through the various cryptocurrencies. They would like to create a competitive environment for the innovation in payments. And basically, they want to meet the need of the digital economy in terms of the distribution, in terms of the availability, usability of the digital money, as well as they would like to address the declining and the cash in the market. We need to be really careful about when we talk about the digital money and the cashless society or the payments. Yes, we are moving towards the cashless society, but it's prudent to say less cash society rather than cashless society. Because the product and services what we are building up today, it's not for the overall population, which is over 7 billion. These are mainly to cater a couple of billion population. So we got to be really careful about the digital exclusion as well. So the central bank digital currency is going to play a significant role in the building blocks for the cross-border payments as well. It's one of the most interesting topics that I love to talk about. Now, we have got a limited time, so definitely we need to move quickly as well. And reasons behind the growth. Yes, we understand the payments, we understand the rationale. Now, what is really happening? Why there is so much growth? And all thanks to technology. And if I have to pick up one thing, and that is mobile. Things have changed through mobile. If you can just look into this picture from 2010 to 2020, the mobile penetration in the market, specifically into the payments or the banking transaction, it has changed dramatically. Number of transactions to the digital bank, through the mobile banking or internet banking in UK market is far beyond the expectation. And that's a transformation that we have seen in last couple of years. And mobile is not only a channel. People used to walk into the branch probably once a year or a couple of times a year. Now, they rarely walk into the branch because they walk with the bank. And thanks to the digital banks and the digital channels, they've got the services available on tap. Not only from the payments or the bank account or the basic account services, but including the mortgages, investments, or any other their needs, which are available through the mobile banking. So one thing which has really changed or transformed the payment industry is the mobile. And the second thing is about the e-commerce. The adoption of the e-commerce, if we consider this graph from 2007 to 2020, it has grown up significantly. So with the growth in the e-commerce, we have seen the growth in the payments, especially from the FinTech perspective, or with the growth in the contactless payment. The volumes in the payment business have grown up significantly. And so does the value stream as well. Here's a very interesting part, the minimum amount. We talk quite regularly about the minimum amount. And that's what I said earlier. If you had to make a 50 cents transaction or 50 pence transaction, you wouldn't look into change. You'll just swipe your card, or you will just wave your phone to make the payment. And these are the previous news that you're seeing from the April 2017, that there was a view to impose a minimum transaction amount on a Visa credit card issued in the US territory. So when we are talking about these minimum payments or the small payments or the small change, let me clarify this. There's a huge transformation that is going through at the moment, and we are yet to see. And all thanks to the open banking, all thanks to the payments innovation, and all thanks to the card networks as well. When we talk about the fee, why there was a difference into the minimum payments as well as the small change earlier? Because it used to occur or attract the transaction fee, which has gone away. Because nowadays you can do account-to-account transfer, account-to-account payments. And on the top of that, even for the merchants, when you are buying something online, the merchants land up in paying a transaction fee called the MDR, that is the merchant discount rate. And let me clarify this again. In certain regions or the certain economies are very clear, and they have mandated that over the period of time, the merchant discount rate is going to be 0, so that they can fuel the growth in the digital payments adoption. And India is one of the countries that is looking at the 0 MDR over the period of time. So now the question comes down to that how the payment company is going to make money, how the service provider is going to make money. So the payment players, they started focusing around commoditizing merchants. They started creating the new value streams to generate revenue while providing services to the customers. And such examples are like Paytm, PhonePe. They are just a few in India. And all thanks to the UPI, which has fueled the growth into the whole payments landscape. Not only in India, UPI is basically unified payment interface. It has fueled the growth into the overall landscape in India, and it has influenced quite a lot of other projects globally, including P27 in Nordics. So this is a recent data. If you look into the top public payment companies revenue, from the American Express to the Visa to PayPal and Mastercard, and these are in billions. They are growing at a rapid pace. I led the future of payments at Visa years back. In 2010-11, I led the future of payments at Visa years back. In 2010-11, we used to process 60 to 80 million transactions just in the European market. If you ask that number today, that has grown up exponentially. There's no relevance. So these companies are growing at a rapid pace. And if you can see, these are dominated by US. Now we are going to look into the last topic of this short masterclass, that is the various methods, the payment methods. It is really critical to understand what are the payment methods. And I'm pretty sure most of you are using them day in and day out. Let's go through that. So the traditional payments, like your cash, check, wire transfer, demand drafts, then cards, the card networks, the Visa, Amex, Mastercard, and the chip and pin. Then came around the contactless, the mobile payments, P2P. Now we are even looking into the wallets, and these are your The payment wallets, which are associated with your cards and accounts. Along with, you have got a crypto wallets as well, which are available in the market, whether they are Ethereum based or Bitcoin or any other cryptocurrencies. Then you have got the multiple other alternatives as well. And one of the most interesting is about the buy now, pay later. Yes, you have got Apple Pay, you have got Google Pay, you have got a variety of payment methods, right? And thanks to open banking, you've got account-to-account transfers, you've got RTP, you have got RFP, and the various other payment methods which are available. Over here, you are seeing as a UPI, which is one of its own kind of national payment infrastructure built up by NPCI, National Payment Corporation of India, and which has fueled the growth in the domestic payments in India. And now it has built up the partnerships in UAE and Singapore and going global. So when we talk about these alternative payment methods, they are growing. Now, as I said about the buy now, pay later, there are umpteen examples around the buy now, pay later companies like the Klarna and Afterpay and many others. At the same time, there's a consciousness around these buy now, pay laters because they are not regulated yet. So the consciousness is around, yes, they are offering the frictionless customer experience at the checkout and getting a credit to a customer, but that credit gets built up very soon in a short period of time, and that might push customer into a debt cycle. Now we can discuss that in contrast to the credit cards as well, because credit cards attracts the interest rates and they can push the people into the debt cycle as well. Yes, we can talk about these two products. But at the same time, credit cards comes with its own benefit as well. And they've got a restriction in terms of the credits available to the consumers. So let's not get into more detail about the individual product, but there are umpteen products available in the market and the methods available in the market for consumer to make payments. And that is one more reason for payment companies. That is one more reason for payment companies or the providers to provide various payment methods to the consumers. And that's why we have got likes of Stripe, likes of a Primer, which is another payment orchestrator which is coming up into the market. So yes, we talk about the payments, we talk about financial services, we talk about banks. Yes, everything evolves and revolves around payments. Now here, I would like to really focus a few minutes on the financial inclusion. The topic which is closer to my heart, being an advisor to G20 GPFI, as well as being involved into multiple initiatives. I said most of the services, the platforms, the capabilities that we are building, we are keeping a couple of billion population in mind. Are we really building the products and the services for the whole society? And the biggest challenge what we have today is around unbanked and the underbanked population. There are multiple initiatives which the various governments have taken to address this challenge. India has opened 430 million accounts in the last few years, focusing on bringing people into the mainstream financial services. And let me clarify this. When I say about financial inclusion, it is not only a challenge for developing countries. It is an existing situation even in the developed countries like UK, US, or European markets. Just the extent of the problem is different in the different geographies because of the infrastructure. And let me clarify this again. When I talk about the financial inclusion, it is not only a financial services problem. It is a public policy challenge which needs to be addressed together. The financial services just by themselves, they can't address financial inclusion. The question comes down to whether payment is a gateway for the financial inclusion. And in my view, yes, payment is a gateway for the financial inclusion because government in various geographies run multiple policies for underprivileged people. And one such initiatives like the G2P, government to person payments, just by enabling that, we can start addressing this problem to a greater extent. And we have seen that umpteen examples globally. And yes, I think about the unserved society quite a lot, but yes, the underbanked is a challenge. Yes, the unbanked is a challenge, but at the same time, underbanked is a major challenge as well. So are we really creating a sustainable environment for people, those who can't afford the basic services? Are we really creating a sustainable society and the sustainable financial services, or the sustainable payment ecosystem? So the question is how we can bring people into the main financial stream, how we can make services available to them. I was just giving an example about India, and I've seen umpteen products and the services available in the market, which has improved the livelihood of millions of people. And thanks to UPI, the Unified Payment Interface, as well as the multiple payment service providers like the Paytm or the PhonePe or the other products and services which are available in the market, they have changed the livelihood of millions. And I would expect the same from the various other markets as well. So we are at the end of this short masterclass as a part of the digital payments in finance with CFTE. And if you like the content, we have got a detailed and very comprehensive course on digital payments in finance, which covers from the history to the future of payments. That takes care of the infrastructure, the business models, the payment strategies, as well as the future of payments, including the digital currencies. So if you're interested in that course, please visit CFT's site, look for the digital payments and finance course, and I'm sure you're going to like it.
Many thanks for that wonderful masterclass, Ritesh. And for our audience, we hope you enjoyed the first part of Masterclass on Digital Payments led by Ritesh Jain. Now we will continue our learning journey in the payments world with the CFTE's unique 5x5x5 experts, where 5 experts represent 5 trends in payments in 5 minutes. CFTE gathered 5 of the greatest minds in payments who will share their thoughts on the most significant trends in payments over the last year and most significant trends to look out for in 2022. Now, these CFTE experts are involved in their fields in very different ways, and so each has approached the challenge with a different hats. We are thrilled to welcome such a diverse set of views and opinions to what is sure to be an incredibly engaging, interesting, and perhaps a little controversial session. We encourage all those in attendance to share your thoughts in the chat function. Which expert do you agree with? Which trend do you think is the most significant? And which trend do you think has been missed out of the conversation? Do not forget that you will all have a chance to ask the questions at the end of the session during our live Q&A. Let's begin with the 5 experts.
So good afternoon. I've selected for you 5 key events which happened during the last 12 months in the digital world. I'm sorry, but they will be a little bit biased by my background as a former central banker. So the first date I have selected for you is October 2020. The Central Bank of the Bahamas has issued the $100, the first CBDC ever. I think this is important because CBDC is no longer a concept. It is now a reality in a small country, of course, but nevertheless, a reality, and it is something which is very important for the history of money. Second event that I have selected for you is in December 2020, the Libra has become the DM. I mean, the change of name has no importance. It's not what matters. What matters is that progressively the Libra has abandoned its ambition to become a global currency. They will now focus on stable coins linked to single currencies, and therefore they will be under the clear supervision of one central bank for each of their DMs. This is completely different from the situation where they would have issued a multi-currency Libra, issued based on several multi-currency basket, which would have been very difficult to regulate for central banks. So Libra becoming DM means, in fact, the central bank taking control about the DM. The third event I have selected for you is CBDC again, but from China this time, from a small country in Bahamas now back to the bigger country in the world. We are not yet in production. It's still in the trialing phase, but trialing phase involves already 25 billion wallets. So the bigger country in the world is going to move to CBDC very, very soon. This is clear from the white paper of the Bank of China, the People's Bank of China. The fourth event I have selected for you is again CBDC, but this time the ECB launches this digital euro project. They are very clear that no final decision is taken, but the ball is rolling. And as a former ECB employee, I know very well that when ECB launches a project, there is a good likelihood that the project will mature. And therefore, this is another proof that the CBDC is moving ahead. And finally, last slide about a speech I read recently of John Cunliffe, the speech he delivered at Cybos, the virtual Cybos. And he said at this point, crypto assets represent $2.3 trillion, and 95% of them are unbacked. And that means, and he insisted, in fact, that they have no intrinsic value. And although he was relatively optimistic about the impact on financial stability, I would nevertheless wonder whether the fact that we are facing assets with no intrinsic value does not mean that we are in front of a giant Ponzi scheme. Thank you very much.
Very much for the introduction. Yeah, I'm glad to have the opportunity to share a couple of remarkable events and developments over the past year that have come across my way. And the first I'd like to highlight is that in Europe, the account-to-account instant payments have really become the new normal in several countries already and are quickly doing the same in other countries. And especially there is still a big gap outside the Eurozone. Instant transfers are outpacing the traditional credit transfers. Countries like the UK, Denmark, and Sweden, more than half of the credit transfers are instant. Within the Eurozone, however, they're catching up. They started later from 2017, whereas the other countries started already 2012, 2013. And there are now some clear leaders emerging, the Netherlands, Spain as well, Slovenia, small country, but making big steps. Whereas the larger countries like France and Germany are still a bit lagging, but expected to pick up. And the picking up is also pushed, spurred on, you could say, by the regulatory authorities, both the European Commission and the ECB. The ECB has mandated to make interoperability possible through the TIPS system, which has gone live 2 years ago. And at this moment, all the banks that are using SCT Inst are forced effectively to join that system so that they can all exchange payments between them. And also there is still up in the air, but expected before the end of the year, perhaps regulatory intervention coming from the European Commission So this trend is here to stay. The second remarkable event is what I call Facebook's about face. There was a lot of turmoil in the market about the Libra project, the stablecoin that Facebook announced back in 2019. 2020, there was a reversed version after the first regulatory pushback, and then effectively it got shelved. The retreat was back to the US. It wasn't called Libra anymore, but it's called Diem, and it's to be launched in the US only for US dollar. So what you can say, and this is quite interesting to see, is that it was almost like a first big event started by a non-bank, Facebook, with trying to become regulated and trying to, as they say, have a constructive dialogue with all the regulators worldwide. But effectively, the effects, as far as I can see, has been that the regulators mainly have become annoyed or even antagonized. Yet I think there is still the innovative potential, but the tone of voice and the approach that Facebook took has not gone down well. So the question is, will next year see Facebook regain strength? Wait and see. One thing that has come out, and that's also interesting, is recently in October, so this month, the BIS issued a paper saying that stablecoins should be subject to the same oversight as other financial market infrastructures. That gives an opening because there are many financial market infrastructures who know how to deal with their oversight regimes, who could now look at stablecoins, including Facebook's. Really triggered by the announcement of Facebook of the Libra earlier on, is that central banks have jumped on digital currencies. The CBDC is top of mind. We've seen live implementations already last year in China, in the Bahamas with the sand dollar, and in Cambodia. And in many other countries, there is accelerated development, proof of concept, and say preparations for going live, even if the decision hasn't been taken yet. Yet also, and notably in the US, doubts remain as to what problem exactly is being solved. And the Federal Reserve Vice Governor Waller gave a quite skeptical speech in August, worth looking at, if you have the time to look it up. A fourth interesting thing is that money is flowing into payment fintechs really big time. The funds that are going there through increases, there are big increases in the number, in the size of funding rounds. What is interesting to note is that it seems to be largely the scale-ups, the companies that have been around but hadn't grown yet very fast, had grown organically, that they are taking a growth sprint, like Stripe, Square, and Klarna, and also the mature payment giants that we've seen around for 5, 10, 15 years, or MasterCard even 60 years. And what we see is that those giants, witnessed by the CFTE market cap tables, which Hui is maintaining, they continue to gain market value. And it seems to be the case that they're just starting to benefit really big time from the fact that they're there and they are established and they're trusted. Now, a quick look to finish off this 5 minutes to the crystal ball for 2022. Basically, on these trends that I've mentioned, I think they'll continue. The acceleration of instant payment, those will go also to include cross-border and cross-currency connections. There is the debate on why CBDC, which will continue, but it will be in parallel with concrete developments. So I think there will be some big debates, but the steamroller will continue to roll. Another thing probably is to see that we'll see even more artificial intelligence, machine learning coming to the rescue, where in fact the risk is raised when payments are being made instant, fraud risk, cybercrime risk, but these new technologies, AI, ML, and also functionalities like confirmation of payee, request to pay, are supporting this. And a final prediction that I personally make is I think the Bitcoin economy of El Salvador is a big mistake, and I think it will crash before the end of the year. So thank you for giving the opportunity of sharing a couple of thoughts. Thank you for watching, and I hope to see you around in payment space soon. And with this, back to CFTE. Thank you.
My name is Grace Chong, and I'm a payment specialist from Simmons & Simmons. So in February 2021, we started off the year with the continuation of COVID-19. And JP Morgan noted then that Bitcoin can be considered as an economic sideshow, and FinTech innovation is a story that will dominate financial services, and specifically the increased demand for digital services, the rise for online startups, and expansion of digital payments. Well, I tend to think of crypto as the new paradigm, and we're ending off this year with crypto payments making a splash on the world stage, which is why it makes a splash also on one of my key themes today. So I have been a payment specialist for many years, but it was only the last 2 years that we saw BNPL, short for Buy Now, Pay Later, really gaining momentum again amongst the millennials and Gen Z. We have seen a wave of commercial partnerships. So, for example, Standard Chartered's 10-year US $500 million partnership with Singapore-based Atomi, a great example of a banking-as-a-service play where BNPL providers are seeking to leverage on strategic partners to create more revenue models and improve their risk models. Regulators in various other countries, such as Singapore, US, Australia, and New Zealand, are also considering responsible lending laws. And in the meantime, BNPL is still projected to grow 58% in the next 5 years, according to a report by IDC. So definitely a trend to watch. This is, after all, against the backdrop of an increased focus on e-payments, and the e-commerce industry is expected to expand by 5.5% by the end of 2021. And card payments, we saw, are becoming the preferred means of transacting, especially in the time of COVID-19. And there has been a significant increase, 91% to be exact, to contactless payments in time during COVID-19. And in Singapore, you have seen that basically, it is one of the most integrated nations, with 66% of consumers developing contactless habits. And definitely the use of QR code scans is also increasing, and there's increased use of and potential for this for purposes like the ordering of food, unlocking of city bikes, and other purposes in different countries in Southeast Asia. So definitely we'll continue to see this as a trend on the world stage, which now brings us to digital assets payments, one of my favorite topics. So as Shamav P, the founder of AOL IM, said, digital assets payments, it is money 2.0, and it is a huge deal. And debit prepaid card payments are really taking off in the market, with crypto card players getting licenses or applying for licenses such as Crypto.com, YX, and tie-ups such as Grab and AAA, enabling crypto trading services in countries like Singapore and different jurisdictions, Indonesia, Korea, and other countries. Mastercard has also announced that merchants on its payments networks will soon be able to integrate crypto into their products by partnering with Bakkt to expand the ways users can use crypto. Which brings us to the next trend, which is financial products and the launch of the super app, which has been happening for a while. I'm sure everyone is familiar with WeChat, but definitely we have seen the trend moving towards the bundling of financial services through payments on payments apps. So basically the offering of remittance services, insurance, and other loan products such as Korea's Kakao Pay, Indonesia's Gojek and Tokopedia, and India's Paytm. And with the rise of interest in ESG, there has also been increased focus on ESG products, and perhaps we will start to see more such products also being offered on payments apps. There are often a lot of players are also looking towards whether they are able to open product lines on their apps and whether they're able to combine or offer more big tech services such as Amazon. But it is often a difficult game to play, as users are often difficult to capture in increasingly saturated markets. So lastly, I think we cannot end off without a quick note on Partior, which saw its first pilot recently in October. And this is the blockchain payment platform launched by JP Morgan, DBS, and Temasek. The enterprise blockchain platform aims to improve the speed and reduce the cost of cross-border payments. They are expected to reach 156 trillion in 2022. It will start by focusing on Singapore dollar and US dollar currencies, and the open network grew out of the Monetary Authorities of Singapore's Project Rubin, which started as an exploration of central bank digital currency or CBDCs. And Patio's wholesale clearing and settlement system can enable settlement in less than 2 minutes, improve transparency, and reduce the need for intermediaries, which removes transaction costs. So definitely one to watch as they expand on the global stage. So with that, this ends my 5 by 5 by 5. Thank you, CFTE.
Hello, my name is Fabian van den Reet. In the next 5 minutes, I'm going to give you a bit of my personal thoughts about how the payment industry behaved this year and what's up for next year. I think this year is, of course, the year of the central bank digital currency. Every central bank we know is working on that. It's a big debate, public versus private money and commercial bank versus central bank money. Who will have access to CBDC? Only firms or you and me is still up for grab. Also discussion about what is a stable coin, what is an unstable coin, as we've heard. And also as a capital markets expert, I'm very curious to see the impact that CBDC will have on settlement of equities and bonds, for instance. Another aspect, talking about digital assets, I know it's not payments, but to me, this year was really the year where people realized that tokenization of existing securities and new digital assets will go institutional. And again, the impact on the payments industry of the settlement process. Are we going to settle against payment, or are we going to settle bonds against other type of securities? Is also an interesting debate. As far as payments provider is concerned, if I look at the incumbent payment rails provider, it's clear that they are going into a collision course, whether you are a credit card rails or a correspondent banking rails. At the end of the day, because of the move to domestic instant payment and cross-border instant, those infrastructure will kind of overlap more and more. Even though the needs of the user is being fragmented, there's more and more vertical payment solution. We see potential overlaps of providers, and this year was also a big push towards providing SMEs with better cross-border payment solution. Now, payments is also producing a lot of payments data, and in itself, the value of the data might be bigger than the value of the transaction. What we see as well is that you need more and more data for coming up with the right customer insight, and especially to fight financial crime. And even though that solutions are getting more and more sophisticated, payment fraud is on the rise. It's increasing, not decreasing. With a move towards real time and instant, this analytics and detection will become even more difficult. And there will be a need also for cross-ecosystem, cross-rails analytics, because today analytics are very, very much bound to the network, whether it's a credit card or a correspondent banking. Tomorrow and today we'll need solutions which are cross-rails. To finish off, we've seen very active regulators this year. I think next year will be even more of that, not only coming up with new regulation, but also being very innovative. And when you see what several regulators, whether it's CBDC or what the BIS is doing, clearly innovation and regulation is far more intertwined than it used to be. You have regulators as innovators, and you have some of the innovators saying, I don't need regulation, I'll self-regulate myself. So, which is the case, for instance, in some DeFi initiative. So how will this unfold? Well, we'll know that next year. Thank you.
I love the idea of 5 minutes, 5 slides. And here I'm going to talk about the payments and the FinTech. My name is Ritesh Jain, and I'm a co-founder at Infinite and a member of G20 GPFI, which is Global Program for Financial Inclusion. So the first thing that I would like to talk about in payments, as well as like everybody's quite excited throughout this year and the last year, and I'm pretty sure going forward as well, is buy now, pay later. Why now, pay later? Because it removes the friction from the customer journeys. And if you look into the net promoter score of buy now, pay later in comparison to the other payment methods, and definitely it tops it all. So everybody is getting excited with the festivities and the festive season for the shopping. And not only the retail companies, but the payment companies are gearing up for that. Why? Because that's where the money is. But is it really helping out the consumers, or is it helping out themselves? That's something to watch out for, because there's no strict regulation around it. And we are quite conscious in terms of how it is going to work out in terms of the debt over the period of time. So this is something to watch out for. But for now, yes, we all end it for buy now, pay later, marry now, pay later, shop now, pay later, or do anything where you have to make payment, you can do it later. And that's what on the offer now. The other thing that I'm quite excited and I've seen the significant adoption in the market is the cryptocurrencies. Yes, it's a payment method, but at the same time, it is not just the payment method today. The people are excited about the cryptocurrencies from the future of payments perspective, but at the same time, it is providing an immense opportunity for people for investments. It's not only for the retail investors, but for the corporates as well. MicroStrategy, everybody knows about it. They've invested significant amount of money in the Bitcoin. And that's why we are seeing quite a lot of movement into the cryptocurrencies. And not only that, from the investment perspective as well, we have seen a huge surge in investment from the VC landscape into cryptocurrencies, the startups. And that has led to the highest number of unicorns in this year. So yes, the cryptocurrencies, is it a FOMO? Yes, a kind of. Everybody is rushing towards it, but it will stabilize over the period of time. And we will see more stable payment method through cryptocurrency over the period of time. Contactless. Yes, we have been talking about it for a decade. We have seen a huge surge in the contactless payments. And the overall contactless payment is growing exponentially. It is dominating the all payment methods across. Just in the 2021, the contactless payment have grown up by 45%. Yes, it is all due to pandemic as well. But whether this will continue over the period of time, yes, it will. But are we going cashless society? No. I would like to say that we are going to be less cash society rather than the cashless society over the period of time. Because the adoption of the cash is still there. And that is going to be there because we've got a huge population to serve. And unfortunately, a significant number is still unbanked. So yes, the adoption is going to continue, but we are not going to get rid of cash anytime sooner. Investment. That is one of the most interesting and favorite topic for all. We have seen a huge investment across the FinTech landscape, and that is led by few of the sectors, specifically the cryptocurrencies as well as the payments. I wish I had a crystal ball, but I said this in early 2020 that the pandemic could lead to the birth of new FinTech unicorns. And guess what? In Q3 2021, we have seen 42 new unicorns. And the investments in the FinTech is all-time high. It is double than the last year's investments. So it is not stopping. It has continued to grow. And yes, everything evolves and revolves around payments. Now the question is, what is going to happen later on? As I said, I don't have a crystal ball, but what I can see, everything evolves and revolves around payments. We are going to see a further innovation in the payments landscape, which is going to lead and support the open banking and further the open finance landscape. So the organization, financial services, fintechs are looking at the future to serve overall financial well-being of a customer. And that's where the focus is. So if you see, everything is around the payment landscape, whether it's your insurance, asset, wealth management, telco, mortgages, everything is going to be under single umbrella over the period of time. And what is enabling all of that? Is the payment transaction, is your authorization, acceptance, and the data. So yes, this is something to watch out for. Yes, it is at a high level, the open finance. Open banking is just the stepping stone, but the future is open finance. And that is going to be enabled by the payment methods and the payment rails. And that is the fundament.
And that's a wrap for 5 experts, 5 slides, 5 minutes in digital payments. We would like to thank each and every speaker and expert who has joined us today for these 2 masterclasses. And I hope that all our viewers have enjoyed the session on digital payments as much as we did. At this point, I also know, and I'm pretty sure, that you must have a lot of questions to ask to our experts. So don't worry, we have our experts joining us live in just a couple of minutes. So keep those questions ready, and we will be right back with you along with Carlos and Ritesh. See you all in a moment.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू। हाँ कर सकते हैं। नहीं कर सकते। लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender, and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Welcome to Fago, a pioneer in the world of intelligent open finance. With our full-stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With the complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.